IYT, iShares Transportation. Now, having said that, this is a weekly chart. You're still in a weekly sell signal. And you've come right up and tested this double top 50-week moving average where that reversal came immediately in. What we would like to tell you is how to sell these rallies short. Not only that, we'll be happy to show you how this particular one, and it's a bull, but a bull can be shorted, and you can make money when that bull has to go down like this. Now let me just show you, MMT. When that bull has to go down like that, of course we were short the transports and had puts on them, but you can short this too now. And there are bears to the other side of these things, but here's the key thing, as follows, MMT. One of the things that we're going to tie in with this video is how to use the Dow Jones Transportation Index, and we'll go through that and what bears apply to it. We always cover them. They're on the website. You can find them. And you will enjoy going back through time because this is live. It's here and it's now. So, once again, how do I make money on the other side of this trend on the IYT shares transports? And if they're reversing and going down on a weekly, double weekly to support level now, 10 week and 100 week, it's still got a weekly buy signal and it's going to lose its strength. And if we start to see a lot of selling in the regular Dow Jones transports, and you can look those up on the website, just type it in the search box. Once again, there are Dow Jones components, and the thing about the components are you want to know why they would come up or they would go down. And once again, I'm going to let you view the same chart here that has the same reversal with the weekly sell signal, and it's the DJT, Dow Jones Transportation Update MMTs. Yes, short term, you've got some very strong resistance right up here at these tops now. They go straight across there, okay? And what you have here is the 10-week moving average. And you've got the body of that weekly sitting right there on top of it. Yes, why would it be weak and can possibly break below it and go down to the 100-day? I can tell you why. Here is the 100-day. The thing of, or which you would equate into every 100-day movements. That's starting 90 plus to 10. So you started off at 10 and then you go 30 and so forth. What you would want to do, though, is calculate that out, and you can net it out at 100-week, but what's most important is, where is that top? That is the top, okay? And we just went through the other index. So, and these are the names in it. Now, granted that UPS is up on the day, and you got all green. People are, you know, the shorts are covering in the Dow Jones today because you had FedEx do good on their earnings, and it got a pop. Look at the gap open, 285. Here, this is the actual names, okay? These are the names and the volumes, okay? So, one wants to understand with the economy in 2012 is what happens is if these transports go down, the transports go down because of Europe, well then what that would, the value of that would be the put side of the market and the bear side of the market. And it is right now 11:24 a.m. Pacific Standard Time, 12/15/2001. So we always really get in sync with these Dow transports with MMTs for a reason, because it's a major weighting that we have to keep our eye on, just like the S&P 500 index and our various other components that you need to watch daily and see how they're performing. So FedEx really kicked it off here. So what we're saying, though, is outside of the upside days that we get like today in the Dow Transportation, is the overall weekly value is a reversal. And want you to know that you have to close above that 50-week moving average, and it's held it back. If it closes above the 50-week moving average, we can get a bull run up to here. However, so far, with Europe and year end and everything else involved, we're having a hard time just coming up here and testing where these weekly support levels finally got violated, and they got violated heavily here in the transfers. So, but then we had great rallies. What I want MMTs to understand is that if this is going to serve as the wall of resistance, that would mean that the majority of the trades on the highs would be selling and continue selling short into the rallies, as we have said. And the reason why is that markets have been liquidated down, and it's very important to know where this is going to be and what would happen with Europe and what would happen to our transports outside of our own productivity in the U.S. That's one set of the data. But what about the other set of the data across the pond? How does that affect the Dow Jones Transportation Average, and how do I manage my portfolio risk? What would I be looking at? How would I look at it? And what would be the risk management tools incorporated thereafter using the Dow Jones Transportation Index with bears and bulls, bull ETF and bear ETFs? There are other things that you can do. The leadership that I pointed out is every one of these candidates, if the transportation index is going to break below these moving averages, then that means that there's a key stock, two stocks in this index right here that would be shorts as well.